Welcome to Copilot Podcasts. One man's net worth just surpassed the annual economic output of most countries on Earth. Not a country, not a corporation, one person. And the number isn't even real money, it's equity, it's a bet, it's what the market believes the future is worth. Today, we're breaking down the world's first trillionaire, specifically how this milestone actually happened, what it means for global power and technology, and what it signals about the future of human ambition. By the end of this episode, you'll understand not just the number, but the system that produced it and why it matters to all of us. I've got someone who's been deep in this story, and I want to start with the most basic question that somehow nobody is asking clearly enough. What actually just happened here?
So on June 12th, 2026, Forbes officially declared Elon Musk the world's first trillionaire, and the trigger was SpaceX going public on the NASDAQ. The company raised $75 billion in what is now the largest IPO in stock market history, nearly 3 times the size of Saudi Aramco's 2019 listing. Shares opened at $150, hit $170 during trading, and closed the first day up about 19%. SpaceX entered the market at a valuation of roughly $1.77 trillion, which later crossed $2 trillion.
And that pushed Musk over the $1 trillion line.
Exactly. Forbes estimates his fortune hit $1.1 trillion as of that Friday morning. His stake in SpaceX alone, he owns about 38% of the company, including options, is worth around $715 billion in shares, plus another $50 billion in stock options. Add his Tesla holdings on top of that, and you get to $1.1 trillion.
And to put that gap in perspective, who's the second richest person right now?
Google co-founder Larry Page at roughly $290 to $300 billion, according to Forbes' real-time list. Sergey Brin is just behind him at around $270 billion. So Musk isn't just ahead of the pack, as one analysis put it, he has lapped it. The gap between him and the next person is larger than most people's entire net worth concept of what rich even means.
That's a staggering gap. And I think to really feel the weight of $1 trillion, you need some kind of anchor, because our brains just don't process numbers that large.
Right, so here's the one that really lands for me. According to Oxfam's analysis, if Musk spent $1 million every single day, it would take him 2,740 years to spend $1 trillion. That's not a typo. 2,740 years. And according to IMF data, his wealth is now greater than all but 21 of the world's economies.
Wait, greater than most national economies? That's not hyperbole, that's just the math.
That's just the math. And here's the historical context that makes this even more surreal. According to reporting at Forbes, it took more than a century after the world's first millionaire to crown its first billionaire. And then just over 100 years after that, we have the first trillionaire. The pace of wealth creation is accelerating in a way that's genuinely hard to wrap your head around.
So this wasn't random, this wasn't luck in the traditional sense. Walk me through how this actually got built, because I think people assume it's just Tesla, right?
That's actually a really important distinction. Tesla made Musk famous, SpaceX made him historic. Those are two very different things. Musk first appeared on Forbes' billionaires list back in 2012 with an estimated $2 billion fortune. He was the 634th richest person in the world at that point. By January 2021, Tesla's share price had soared enough to push him past Jeff Bezos for the #1 spot. But the $1 trillion moment came from SpaceX.
And analysts actually saw this coming, right? This wasn't a surprise to everyone.
Morgan Stanley analysts flagged it as far back as 2021. They suggested not only that Musk could become the first trillionaire, but that it would specifically come from SpaceX. So the mechanism was predictable, even if the scale felt unreal. And there's actually a term that's emerged to describe what he's built. Some analysts are calling it Muskonomics.
Muskonomics. Okay, I need you to explain that.
So the idea is that Musk's companies aren't really separate businesses in the traditional sense. They're an interconnected technology ecosystem. Tesla handles electric vehicles, batteries, autonomous driving software, robotics, and energy systems. SpaceX runs launch services and the Starlink satellite network, and it's also absorbed xAI, which brings artificial intelligence and the X social media platform into the wider structure. Then you have Neuralink working on brain-computer interfaces, and the Boring Company on underground transportation. Together, they overlap through AI, battery technology, autonomous systems, satellite communications, and aerospace engineering.
So it's less a collection of companies and more like a technology stack for civilization.
That's actually a really precise way to put it. And unlike the conglomerates of the last century, which were connected by supply chains or consumer brands, these businesses overlap through shared engineering talent, shared investors, shared long-term ambitions. The Daily Economy described it well. Most of Musk's wealth isn't cash, it's equity. And equity markets are inherently forward-looking. Investors aren't paying for what these companies earn today, they're paying for what they believe these companies might produce years or even decades from now.
Which raises a really uncomfortable question. What exactly are we valuing here? Because some of what SpaceX is promising is genuinely speculative.
That's the tension at the heart of this whole story. SpaceX is a genuinely remarkable company. It has changed how rockets work, driven down the cost of getting things into space, and built Starlink, which has brought internet connectivity to some of the most remote places on Earth. But a significant portion of the valuation rests on technology that, by the company's own admission, may take years or decades to become commercially viable. We're talking about missions to Mars, point-to-point travel on Earth via rocket, making humanity multiplanetary.
So those aren't near-term revenue lines?
Not even close. Analysts at Renaissance Capital put it plainly, A market cap of $1.5 to $2 trillion for SpaceX would, in their words, throw all traditional valuation methodologies out the window. They said it would be best understood as the Elon Musk premium. The market has literally created a category of valuation named after one person's personality. That's unprecedented.
The Elon Musk premium. That's wild. And there's a real split in how analysts see the upside here, right? Like Goldman Sachs versus Morningstar?
Yeah, and the gap is enormous. Goldman Sachs' underwriting projections reportedly envision SpaceX revenue growing from roughly $19 billion in 2025 to nearly $475 billion by 2030. Morningstar, on the other hand, has suggested a base case enterprise value closer to $1 trillion, about half the IPO valuation, and assigns only a small probability to the moonshot scenario approaching $2 trillion. The point isn't which estimate is right. The point is that today's valuation represents markets pricing profoundly uncertain futures, not certainties.
And Uday Kotak, the founder of Kotak Mahindra Bank, actually captured that tension really well when he posted about the IPO.
He did. He wrote on X that the SpaceX IPO does not fit any traditional matrix and called it a huge bet on the future course of planet Earth. And then he said, and I think this is the most honest framing anyone offered, only time will tell whether we, the human race, have arrived into the fairy tale world we grew up in as children or are in a mega bubble. That's the question hanging over all of this.
Fairy tale or mega bubble? I mean, that's the whole debate in one sentence. But let's shift to the part of this story that I think gets underplayed, the power dimension. Because this isn't just about money, it's about what this level of wealth actually does to the world around it.
Right, and this is where the conversation gets genuinely serious. Oxfam released an analysis the day before the IPO that put the scale in stark terms. At $1 trillion, Musk would be richer than the poorest 46% of the world's population. That's 3.8 billion people combined. And his wealth grew by over $550 billion in just the past year, which works out to an average rate of over $1 million per minute.
$1 million a minute in wealth growth.
And Oxfam's broader 2025 inequality report found that worldwide billionaire wealth hit $18.3 trillion, with the number of billionaires topping 3,000 for the first time. The annual surge in billionaire wealth alone, $2.5 trillion, was nearly equivalent to the total wealth held by the bottom half of humanity combined. That's 4.1 billion people.
And the political dimension of this is something Oxfam has been pretty direct about.
Very direct. According to the same Oxfam analysis, billionaires are now over 4,000 times more likely to hold political office than ordinary citizens. And Nabil Ahmed, the senior director of economic justice at Oxfam America, called Musk's rise to trillionaire status a new pinnacle of oligarchy and a dark day for democracy. He specifically described Musk as a government-backed trillionaire, arguing that much of his fortune rests on past government support and that he used his time in the Trump administration to protect and enlarge that wealth.
And that's a perspective worth sitting with, because it's not just a political opinion. There's a structural argument there about how the wealth was built.
Exactly. And Michael Morris, a professor of leadership at Columbia Business School, made a point that I think cuts through the noise. He said, and I'm quoting here, "I don't think for society it really matters that it's Elon Musk as opposed to anyone else. But our institutions are under our control, and our institutions are allowing greater levels of inequality, and we just know empirically that that puts democracy at risk. So the concern isn't really about the individual, it's about the system."
That's a really important reframe. It's not a Musk problem, it's an institutional design problem.
And Morris also made a point that gets lost in the headlines. This wealth is largely not liquid. It's locked up in equity stakes in his companies. As he put it, it's not like somebody winning the lottery. It's money that is his on paper, but with different time horizons of being available. So the $1 trillion figure is real in terms of market valuation, but it's not like there's a $1 trillion checking account somewhere.
Which is actually a really important distinction for how we think about what this wealth can and can't do.
Right. But here's what makes it still consequential, even as paper wealth. Researchers at UC Santa Barbara studying wealth concentration have noted that a figure accumulating trillionaire-level wealth could take on a near mythological status in public perception, with real and unpredictable consequences for institutional trust and social cohesion. The perception of that power is itself a form of power.
The perception of power is power. That's a really interesting lens. And I want to push on the other side of this, because there are people who look at this and say, wait, is this actually bad? Like, is there a legitimate argument that this is just capitalism doing what capitalism does?
There absolutely is, and it's worth taking seriously. The argument from the other side is essentially that Musk's wealth isn't a glitch in the system, it's the system working as designed. Capitalism rewards risk, scale, and timing. And Musk took enormous early bets on electric vehicles and space exploration when almost no serious investor would touch either of those sectors. The risk was real. The payoff is proportional to that risk.
And Jamie Dimon, the CEO of JP Chase, who had a pretty contentious history with Musk, actually came out and called him the Edison of our time and our Einstein. That's a significant shift.
It is. And it tells you something about how the wind has shifted in terms of how the establishment views this moment. The Logical Indian piece on this put it well. That quote from Dimon tells you everything about how quickly the narrative around Musk has changed. But the same piece also asked the harder question, what are we actually valuing? Because the market has created a category of valuation named after one person's personality, and that's worth interrogating.
And there's also the Oxfam stat that really stuck with me. A 10% tax on Musk's $1 trillion fortune could end global extreme poverty for a year, lifting over 800 million people above the extreme poverty line. That's not a political statement, that's just math about scale.
It is just math. And Oxfam also pointed out that with $1 trillion, Musk could give $100 to every single person on Earth and still be one of the 10 richest billionaires in the world, with more than $184 billion left over. Those numbers are designed to make the scale visceral, and they succeed. Whether you think that's an argument for redistribution or just a reflection of how markets work, the scale itself is undeniable.
Let's talk about what this means going forward, because Musk isn't the only one who could reach this threshold. This isn't a one-person story.
Right, and this is where it gets even more interesting. Oxfam had projected, before the SpaceX IPO, that 5 individuals were on track to reach trillionaire status within a decade. The list included Jeff Bezos, Larry Ellison, Mark Zuckerberg, and Bernard Arnault alongside Musk. Musk just got there first. But the broader trend is that we may be entering what some are calling the trillionaire era. Not a one-off event, but a new category of wealth that multiple people could occupy.
And Time magazine actually wrote about what that could mean for democracy and the rule of law. The idea that if one trillionaire's power is already hard for governments to check, what happens when there are 5?
That's the alarm that Nabil Ahmed at Oxfam has been sounding. He told Time, there's a reason that we must talk about oligarchy, because great wealth translates into undemocratic power. And the data backs that up. More than a third of the world's largest 50 corporations, together worth $13.3 trillion, are now either run by a billionaire or have a billionaire as a principal shareholder. The concentration isn't just in net worth, it's in corporate governance, in media ownership, in political influence.
And the CNBC reporting on Oxfam's 2026 Davos report noted that billionaires' wealth surged 81% since 2020. That's not a gradual drift, that's an acceleration.
An acceleration that happened while poverty reduction stalled. According to World Bank data cited in the Oxfam report, global poverty levels have remained broadly where they were in 2019. So you have this simultaneous reality. Billionaire wealth up 81% in 5 years, poverty levels essentially flat. Those two things existing at the same time is the core tension of this moment.
And I think what makes this conversation hard is that both things can be true at once. Musk built something genuinely transformative. SpaceX changed the economics of getting to space. Starlink brought internet to remote communities. And the system that produced that also produced a level of inequality that most economists would describe as destabilizing.
That's exactly the paradox. And it's not unique to Musk, it's the paradox of the technology era writ large. The same systems that produce extraordinary innovation also concentrate the rewards of that innovation in very few hands. The question that this milestone forces us to ask is whether we're okay with that trade-off, and if not, what we're actually willing to do about it, institutionally.
And the answer to that question is going to shape what the next decade looks like, not just economically, but politically and technologically.
Completely. Because the technology Musk controls, satellite internet, AI through XAI, autonomous vehicles, potentially brain-computer interfaces through Neuralink, these aren't just business assets, they're infrastructure. And when infrastructure is controlled by a single private individual rather than by governments or distributed ownership, the power dynamics of the entire global system shift.
That's a really important point. Starlink isn't just a product, it's communications infrastructure for entire regions of the world.
And that's what makes the Muskonomics framing so significant. It's not just that he has a lot of money, it's that the companies he controls are becoming foundational layers of how the world operates, how people communicate, how goods move, how data flows, potentially how humans interface with machines. That's a different kind of power than any previous billionaire has held.
So when you step back from all of this, the IPO, the $1 trillion number, the inequality data, the power questions, what does this moment actually mean? Like, what's the through line?
I think the through line is that this is a stress test. It's a stress test of how we think about markets, about democracy, about what we collectively decide to value. The $1 trillion number is real, but what it represents is a market collectively betting on a future that may or may not arrive. And the question of whether that bet pays off for Musk, for investors, and for the rest of the world is genuinely open.
And the Matt Dureau quote from Forbes actually captures the optimistic read on this pretty well. He said, Musk's ascent highlights how rapidly wealth can be created in an increasingly interconnected and technology-driven world. That's the bull case. The world is getting more connected, more innovative, and this is what that looks like.
And the bear case, or maybe the cautionary case, is what Oxfam's Amitav Behar said in the 2026 Davos report. The widening gap between the rich and the rest is creating a political deficit that is highly dangerous and unsustainable. Both of those things can be simultaneously true. The innovation is real, the inequality is real. The question is which one we let define the era.
Here's what this really comes down to, I think. We started this episode with one man's net worth exceeding the GDP of most countries. And what we've actually been talking about is something much bigger than one person's bank account, or equity stake, to be precise.
Right. The $1 trillion milestone is a mirror. It reflects what markets believe about the future of technology. It reflects what our institutions have allowed to happen in terms of wealth concentration. And it reflects a genuine question about what kind of world we're building, one where extraordinary innovation and extraordinary inequality coexist, and where the people who control the infrastructure of the future are increasingly operating outside the traditional checks that governments and democratic institutions were designed to provide.
And the fact that Musk himself joked about being a trillionaire on X back in March, before it happened, and then it actually happened, says something about how the line between ambition and reality has shifted in this era.
It does. And I keep coming back to what Uday Kotak said, that this is either the fairy tale world we grew up dreaming about or a mega bubble. And the honest answer is we don't know yet. What we do know is that the systems we build around this moment, the tax policies, the regulatory frameworks, the democratic institutions, will determine which one it turns out to be.
So here's the thing to carry out of this episode. The world's first trillionaire isn't just a headline. It's a signal about where power is moving, who controls the technology that will define the next few decades, and whether our institutions are equipped to handle that concentration. The number is $1.1 trillion. The question it raises is worth a lot more than that.
And if you want one concrete thing to watch, pay attention to what happens with the regulatory and tax conversations that follow this moment. Because the Oxfam data is clear that a 10% tax on this fortune alone could end global extreme poverty for a year. Whether that happens, or whether the rules continue to be written by the people who benefit most from them, is the real story of the next decade.
We started this episode by saying one man's net worth just surpassed the GDP of most countries on Earth. And we end it knowing that the number almost doesn't matter. What matters is what we decide to do with the world that produced it. Thanks for being here for this one on Copilot Podcasts. This conversation is just getting started.
And honestly, given that Oxfam projected 5 potential trillionaires within a decade, and one just crossed the line in 2026, the conversation is going to keep getting louder.
4 more to go. We'll be watching.
And so will the rest of the world.
Let me ask you something that I think gets at the ambition angle of this, because there's a version of this story that's genuinely inspiring, right? Musk debuted on the Forbes list in 2012 with $2 billion, ranked 634th in the world. 14 years later, he's the first trillionaire. That arc is almost fictional.
It really is. And the LinkedIn analysis that came out right after the milestone put it in a way that I found striking. It said, Tesla made Musk famous, but SpaceX made him historic. And the distinction matters because most billionaires build successful businesses. What Musk did was build ecosystems around civilization-scale problems. When others saw rockets, he saw humanity becoming multiplanetary. When others debated AI, he moved to shape it through XAI. That's a different kind of ambition.
And that ambition is exactly what the market is pricing. Not what SpaceX earns today, but what it might enable for humanity decades from now.
Which is why the Daily Economy piece framed it so well. This isn't really a story about one person's wealth. It's a story about how financial markets assign value to long-duration, high-risk technological bets. The trillion-dollar number is the market's collective answer to the question, what is the future of human civilization worth? And right now, the answer is at least $1.77 trillion, just for SpaceX alone.
That framing actually recontextualizes the whole thing. It's not a personal fortune, it's a collective forecast.
A collective forecast with very unequal distribution of the upside. And that's the tension that isn't going away. The bet is collective. The reward is concentrated. And the question of whether that's sustainable, economically, politically, socially, is one that this milestone has just made impossible to ignore.
All right, I want to make sure we've given people the full picture here. So let's do a quick gut check. Is there a version of this where the skeptics are right? Where the Elon Musk premium collapses and this whole thing looks very different in 5 years?
Absolutely. And the skeptics have a real case. Morningstar's base case valuation for SpaceX is closer to $1 trillion, about half the IPO valuation. Renaissance Capital said a $1.5 to $2 trillion market cap throws all traditional valuation methodologies out the window. The missions to Mars, the point-to-point Earth travel via rocket, these are not near-term revenue lines. They're bets on a future that may or may not arrive on the timeline the market is pricing in.
And we've seen this before. The dot-com bubble, WeWork, markets have priced in futures that didn't materialize.
The logical Indian piece made exactly that comparison. The dot-com bubble turned any company with a.com in its name into a millionaire maker overnight, until it didn't. WeWork showed how a founder's charisma could inflate a real estate company into a supposed tech giant worth $47 billion, until investors actually read the prospectus. The Elon Musk premium is real. The question is whether the underlying technology justifies it over time.
And Michael Morris at Columbia made the point that the wealth is largely not liquid, it's tied to stock prices. So if SpaceX and Tesla don't maintain healthy valuations, the trillion-dollar number is not permanent.
Exactly. He's a trillionaire on paper, and he'll only remain one as long as both companies maintain healthy stock prices. That's a real constraint. But even if the number fluctuates, the structural power that comes from controlling these technology ecosystems doesn't disappear with a stock price correction. The infrastructure is real. Starlink is real. The AI capabilities are real. The paper wealth can move. The underlying influence is more durable.
That's a really important distinction. The number is volatile. The power is structural.
And that's ultimately why this milestone matters beyond the headline. It's not really about whether the number stays at $1.1 trillion or drops to $800 billion or climbs to $2 trillion. It's about what it reveals about the architecture of power in the 21st century. Who controls the technology, who controls the narrative, and who gets to write the rules.
Who gets to write the rules? That's the question that's going to define the next decade.
And the answer to that question is being written right now in the regulatory conversations, the tax debates, the democratic institutions that are either adapting to this new reality or failing to keep pace with it.
So what should someone listening to this actually do with this information? Like, what's the actionable takeaway here?
I think the most important thing is to understand that this isn't a spectator sport. The policies that shape how this wealth is taxed, how these technologies are regulated, how democratic institutions respond to concentrated power, those are determined by political engagement, by public pressure, by the choices that ordinary people make about who they vote for and what they demand from their governments. The Oxfam data is clear that billionaires are 4,000 times more likely to hold political office than ordinary citizens. The counterweight to that is an informed and engaged public.
And understanding the mechanics of how this wealth was built, the equity structure, the market bets, the technology ecosystem, gives you a much clearer lens for evaluating the policy debates that are coming.
Completely. Because the debate isn't going to be framed as, should one person have $1 trillion? It's going to be framed as, should we tax unrealized gains? Or how do we regulate satellite internet providers? Or what are the rules around AI development? And if you understand what's actually at stake in those conversations, you can engage with them much more effectively.
All right, so here's where we land. On June 12th, 2026, the world got its first trillionaire. The mechanism was the SpaceX IPO, the largest in stock market history, raising $75 billion at a $1.77 trillion valuation. The result was Elon Musk's net worth hitting $1.1 trillion, a gap so large that the second richest person on Earth is more than $800 billion behind him.
And the deeper story is that this wealth is a market forecast, a collective bet on technologies that may reshape civilization, priced at a level that throws traditional valuation out the window. The power it represents is structural, not just financial. And the inequality it reflects is real, measurable, and according to multiple credible analyses, a genuine threat to democratic institutions.
Both things are true. The innovation is extraordinary. The concentration is dangerous. And the question of which one defines this era is still being answered. That's what makes this moment worth paying attention to.
And worth staying engaged with, because the rules being written right now around taxation, regulation, democratic accountability will determine whether the trillionaire era is a chapter in a story of human progress or a turning point towards something much harder to reverse.
We started by saying one man's net worth just surpassed the GDP of most countries. We end knowing that the number is almost beside the point. The real question is what kind of world produces that number, and whether we're building the institutions to make sure it works for more than just the person at the top. Thanks for listening to Copilot Podcasts.